A very good afternoon. Welcome to Friday Drinks. It's a special edition. We're out here at the majestic Victoria Falls, and we're attending the annual conference for the mining sector, the Chamber of Mines. And we've got a special guest, Isaac Kwesu, who's the Chief Executive of the Chamber of Mines. Thank you very much for joining us.
Thank you.
And thank you so much for hosting us. We appreciate it.
Thank you.
It's fantastic. And the show is actually sponsored by Nedbank. Thank you very much, Nedbank, for sponsoring us. And we are sure to have a great experience. And we look forward to, chatting to as many people as possible and getting to understand what's actually happening in the mining sector. And I suppose we can just kick it off. How long have you been doing this for, and why the Victoria Falls? Why do you guys come out here in the Victoria Falls?
Our annual mining conference, which runs parallel to our Congress, AGM, and council meetings. Have been there for more than 8 years. But in Vic Falls, we've been here for more than 15 years. In the past, we used to rotate, move around all places in Zimbabwe. But because of the large outturn, the numbers, only this place can accommodate the clientele in terms of the number size that we want to attract.
Yeah, so it's phenomenal. I mean, it's got, I was just saying beforehand that, we attend quite a number of conferences, and I would say this is the most attended. You're just telling me that over 500 delegates.
Yes.
That's massive.
Yes, this is the largest prime mining event in the country. In fact, it's one of the largest events in the region, outside the mine in Indaba. This conference.
So when you say mining in Indaba, you're talking about the annual conference in Cape Town?
Cape Town.
Yeah.
Okay. It is the largest.
Wow. Okay, and the delegates, are they coming from Zimbabwe or across the world?
Across the world.
Okay.
Across the world, yeah.
All right. And why should delegates come to your annual conference?
There's a lot of interest in the resource sector, mining, worldwide. So opportunities, growth, as well as wealth creation, mining is very pivotal. So this is not only exclusive to Zimbabwe, but worldwide. For Zimbabwe, we have a whole array of minerals, more than 60 minerals. We are still underexplored, and those 10 plus minerals that we are currently mining or exploring, still we have a huge impact to corporate and individual wealth creation. So there's huge interest.
Okay, so maybe give us a color. The largest production, which mineral are we producing the most? And, the top 5 minerals that we are producing in Zimbabwe.
In terms of values, gold has surpassed the PGMs for the first time, constituting now 43% of total exports in the mineral basket, followed by PGMs. I think
which are platinum group metals for the benefit of our audience. Yeah.
Platinum group metals is now plus or minus 23. Down from almost 50% due to the commodity prices. We also have lithium, it's now on number 3. We have ferrochrome. We also have coal and nickel. Those are
the top 5. Okay, so let's start with gold. We know that over 60% of the production actually happens with artisanal miners, the small-scale miners.
Yes, we can say small scale. Small scale.
What's the difference between artisanal and small scale and makorokoza?
Artisanal are small scale, but small scale are not.
Korokoros.
No, are not always.
Okay.
No, artisanal sometimes they're informal, but we
Okay.
also have quite a number of entities who are formal, who are small to medium. So
Okay.
Or maybe in the colloquial language that we understand, how many korokozas do we actually have in the country? Would you have a rough number?
yeah, it's estimated. These are hand to mouth.
Yeah.
Plus or minus 500,000.
1,000.
That's a lot.
That's a lot, eh?
Yeah.
And when we say hand to mouth, could you expand on that? Are they just producing just enough for their sustenance, or
not just enough. You see, these are nomads miners. When we call nomads, their activities are seasonal sometimes. During rain season, they may be farmers. During off agricultural season, they become miners. So depending where the opportunity is.
All right,
So
okay.
these are looking for livelihoods.
Okay.
So we find them more prevalent in areas where these resources are endowed. Yeah.
Okay, all right. And when you look at gold mining, if we consider the last 10 years, production has almost doubled, because I think now we're doing about 35 tons a year.
Yeah, they're around 36.
36.
Yeah, or yeah.
Okay. And when you look at the production that has happened over the last 10 years, a lot of it has been driven by small scale mining. The question I have for you is that because of just how gold is laid out in the country, in Zimbabwe, why is it it's so dispersed and it's not really going underground? Is it because of just the lay of the gold deposits in the country?
Yeah, the occurrence of the gold itself, in terms of geological structures, are such that small scale or artisanal mining is possible. And also, this small scale, they're also prevalent in a riverbed mining.
Okay.
Which,
So alluvial.
Yes, alluvial.
Okay.
Where large scale cannot be allowed to do. I mean, it's illegal. But wherever there's gold, whether it's in parks, whether it's in rivers, this small scale can easily access it. Also, large scale mining require a huge resource base, but small claims can only be mined economically by small scale mines.
Okay.
So you'd find where large scale may say the resource is exhausted, small scale can still exist. So we have lots of dams where we may have said economically you cannot mine it, you can't invest a lot of capital. But because of the chief methods of mining, it's very easy for them.
Sure. Okay.
So one of the things that I find quite interesting about gold is if you think about the history of Johannesburg and Gauteng and all the wealth that was created there that built that city, it was basically gold and diamonds. And one of the major reasons why the Pioneer Column was founded and raised money to take on the land north of the Limpopo is they were hoping to find another
Gold conglomerate.
a Rand Gold, and the narrative goes that they crossed the Limpopo, they took over what is now Zimbabwe, but they didn't find anywhere near as much gold as they hoped. But you fast forward to where we are today in 2025. Gold is at an all-time high of $500 an ounce, and we've got this prevalence of gold, but the technology has changed. Maybe 100 years ago or 150 years ago, it was not economical to mine ore that was less than say 4 or 5 grams a ton. But today the technology has changed completely, and you can economically mine gold at 1 gram a ton or less. So I'm interested in your take on this, to the extent that are we at a place where we can have a massive gold boom now? Because we seem to have a confluence of two things: a very high gold price and the technology that makes gold, at very, low, concentration, economically viable to mine. Could we be 100 years later the next big gold mining center of the world?
Yes, the potential is there. It's a function of main numbers. One, we are mining the ancient resources that
Okay.
were discovered some 500 years ago.
Post, World War One, World War Two,
Exactly.
the German mines.
So sustenance of mining operations is a function of exploration. So as long as we do much exploration and discover new deposits, yes, we can take our gold sector to another level. At the meantime, as you are saying, when price goes up, there are certain deposits or mines that could have said they are marginal because the cost could have been too high. Either because of the technology that they've been applied, could have been minimum or low entry at that level. Now with the modern technology, which may reduce costs, as well as the high price, making specific gold ores also economic. This is a plus that we were able to revisit even areas where we said they were not economic because the cost of extracting could not be justified by the daily price, but the price have gone up more than 5 times.
Absolutely.
Yes, the cost it may equally have been going up, but not at a rate that the price has gone up. But when we reduce also cost efficiencies, it makes a plus that we can increase the life of a mine just by.
So you're making a good distinction between the ancient mines and the new mines. So how much of the exploration have we done in Zimbabwe? And is it possible that we still have gold deposits that we don't know about?
Yes, with mining, well, we are standing or seated here. There may be a gold, but the real issue is you need to know what you have. You need to explore. Unfortunately for Zimbabwe, not much exploration has been happening in the past 10 years. We can't talk about any tangible, serious exploration outcomes in the gold sector. I think outside the blanket mine,
Caledonia.
And the new
Kadenga.
ventures, the new ventures that are coming. No other serious exploration has happened. The real issue is to promote and incentivize junior mining. The exploration is gambling. It's a risky venture, and you can't use serious capital to do that. So you need the junior miners.
Why hasn't it happened? Why hasn't the exploration happened? What's holding us back?
You need to promote it. We need to enable it. As I'm saying, issuance of EPOs have not been happening at a rate that make exploration feasible. There are a number of arguments government can can put on the table, but the real issue from the private sector is to address those issues as much as we understand them and make sure that there's exploration activities to support the future mines. Because, as I said, we are relying on ancient mining, but mining is intergenerational.
Yeah.
We need to create
The future.
And
So the beauty about mining is that it's export facing. It's it's agnostic to the Zimbabwean economy's capacity to purchase the minerals because we are shipping the product into global markets. From your perspective, what's holding back investment in the sector? Because to me, it seems obvious that it makes sense that you'll get a good return if you invest in exploration, if you invest in building mines. It seems like a winner. So why aren't we seeing a
The
lot
top
of
5 gold miners in the world, Barrick Gold coming to Zimbabwe?
for various reasons. We can't safely say there's not been investment inflows in the sector. I think there have been huge investment inflows, but they find themselves targeting the brownfields among other existing entities where you just exchange ownership. The
Okay.
argument being policies that may be prevailing are conducive, to support brownfields
And not Greenfield. Okay.
and not the greenfields. So there's huge interest in mining, but current investors are targeting.
So paint a picture for our audience in terms of the investment potential. So, because we talk about the policy framework on our show all the time. If from, the way you see it, if we had an ideal policy framework, what kind of annual investment in mining is realistic? What could we what's our potential?
Yeah, as I'm saying, when look at the funding opportunities, because when we have a funding gap, that's also an opportunity for the investment and financing sector. To support the fact. The entities. I think we have a gap of more than 3 billion
Wow.
just to support existing projects.
Oh, wow.
Okay, not new ventures.
Okay.
That's the gap. There's terms of capital, but capital can be local and international. But the local opportunities for harnessing capital are not all that feasible. One, is short-term capital only available in Zimbabwe. Transitory capital, demand deposits, which you cannot put into mining ventures.
Long-term
mining is capital intensive and long.
Well, the savings are not there in our economy. That's
Yes,
that.
so this is not only, an issue for mining, but
Right across Zimbabwe.
Right across Zimbabwe. So when you have that gap, you have to rely on external capital. Okay, but you have to compete because the whole world is equally competing for that. You go external. You can't have your own policy to say put this money there. You have to attract money from other sources. So we have to position ourselves, our tax framework, our monetary policy framework, and all other perception issues need to be addressed to make sure that we're able to compete with the rest of the world in attracting capital.
So if we close the funding gap and we are now competing internationally, do you think it's possible that we could get to 200, maybe 100 tons
Yes.
of gold?
Yes, it's very much possible. In fact, when you look at our gold strategy, for the country, the Minister of Mines, in their mineral development policy, they were retargeting 100 tons. Initially, we were anticipating it to have achieved it by the year 2025. Yes, we are plus or minus 40. But just looking on the existing projects and the resources available, if we tap it and unlock it, we can reach more than 100 tons within 2 years. It's quite possible. Look at the price that supports, even where you were not able to produce because it was sub-economic. Now with these high prices.
But where would we get the 3 billion? From?
Unfortunately, the production has been relatively inelastic. It has not been responsive with the way prices have gone up. Prices have gone up by more than
Doubled.
more
They've
than
doubled.
50%
Yeah.
in the past 2 years. But production remained relatively stagnant, only maybe in numbers 10 to 20%.
which makes sense because you can't just double production overnight. But if you were a policy czar, if you had a blank piece of paper and you could enunciate mining policy for Zimbabwe completely, what changes would you make which would give you high conviction that we will not only close that $3 billion gap, but we would then see new capital flow to fund exploration and new projects?
Yeah, the enabling policy environment, you are talking about aligning the mining policy,
Okay.
not just to local expectation, but competing internationally. We understand that government is already backing on these policies. We are currently participating with the Minister of Mines in what we call Mineral Development Policy, where we try to say what are the key success factors, what are the critical ingredients that make our policy attractive, making it a policy that is certain, a policy that is consistent, a policy that is predictable, okay, and also come up with institutions that support mining growth. So these are issues that
Can we name them? So let's say, for example, the surrender, the 30% surrender that your big miners are costed to. Are you okay with it, or would you like to see that at 0%?
It's not about the surrender. When you compare with other jurisdiction, they surrender 100%. Okay, in Zambia, in South Africa, they are not paid any USD. But the real issue is on the structure of a monetary system, specifically the issue surrounding
When you want
acceptance.
to import, can you
Fungibility.
get
Yes.
your- Okay.
When you want to import, you must find these foreign currencies available in the bank system timelessly. Okay, when those things are not there, that's when the government agrees with the mining that they have to retain specific amounts. Unfortunately, because of misalignment of the official exchange rate and the exchange rate that is applied on the cost of doing business, that is the parallel market.
Okay.
There's always a loss of value on the portion that you surrender.
Okay.
So when the official exchange rate is trading, at a discount of 50%, it means any portion that you surrender, you lose 50% of your top line, which is revenue. And this
Becomes
is
a tax.
It becomes an implicit tax, definitely.
Okay. All right. So what you're calling for is a free market exchange rate. I'm asking.
Under the prevailing conditions,
Yes.
or without really saying, because the exchange rate can be any form of exchange rate, as long as it's realistic.
Yeah.
As
Which is
long
the
as-
free market, as long as it reflects the market.
Yeah, maybe under the prevailing conditions, you can say free market, but even
Yeah.
manage the float, even peg the exchange rates, they're applied in the world as long as
But they must work.
they must work. That's you are not worried about what type of exchange rate.
Okay.
They must work, and they must not be a differential in terms of loss of value.
But
That's all.
between the power market
Yes,
and the official.
just like anybody else, we don't mind the currency, we don't mind the cat, whether black or white, as on the case the mice. So
Okay.
these guys are just saying, even if you give him the local currency, when you go back to the banking system,
I should be able to get.
must give
when I
me
want to
foreign
import,
exchange
I should be
at
able
the
to.
same rate at which I may have surrendered my
My,
export
my,
earnings.
okay.
Exactly.
All right. Okay. So that's one. Then the second thing is on power. Right now, we've had incessant power shortages. And how has that affected the mining sector? And what would you like to see?
Yeah, we're equally affected, just like it's a national issue. It's not just specific to a sector. And these power outages were equally affected the mining, loss of production time, as much as 8 hours per day. I think it was very prevalent. And where even that power is available, it's not stable. Sometimes the voltage is too high, too low. Those that are not on dedicated power lines, in as much they reach even what we call ring fence arrangement with the ZESA, they will still find themselves being load shedded because you can't separate it from the surrounding communities. So these issues have resulted into loss of
Production, yeah.
production potential revenue.
And you can't get that production time
E-
again.
Exactly. So,
Okay.
so we have done a survey, approximately 500 million, half a billion, that could be potential output that
The
could
cost. Okay.
revenue, potential loss.
Lost revenue because of power shortages. But then, if you ask me, then I would blame the mining sector itself, because if you're losing 500 to $1 billion US, why not circumvent the power utility company and import directly for your mining sector?
We have done our best, and I can say equally the government have been trying to do their best. As some said, these power supply challenges were not really restricted to Zimbabwe. It was global. And even where you wanted to import it,
No,
South
we had a regional
Africa-
shortage.
Yes, South Africa was looking for importing. Zambia the same. So you couldn't avoid it. At the end of the day, the real issue was you invest yours sufficient to cover your gap. So the real issue is whether you have miners participating as power producers. Okay, they've done their best.
Some of them are producing their own power, yeah.
Yes, they've done their best. Others engage in independent IPPs. But when it comes to importing power, yes, many times we've even
Okay.
supported.
Because I then get worried when you have Manize coming on board, and that will on its own it's going to need something like 2,000 megawatts of power, and already we are teetering on our capacity, on our full capacity. So what's going to happen in the sector? Are we likely to lose more if all these mining entities and these iron manufacturing companies come on board?
There's misalignment between the power supply today and the demand for power in the mining sector. But when one looks at the projects, national projects, that government and private sector are embarking, if they come to fruition, I think we may be having excess power in the next 5-10 years.
Do you think that power will actually double? Because right now we're at, we're sort of producing 1.2, 1.3, but I think max we can get up to 2,000 megawatts. But I think that what the demand is probably way above that, especially coming from mining sector.
Exactly. We're intensive power sector.
You consume a lot of power, yes.
Between 600 and 700 megawatts. I mean, that's the average. And maybe in the next 3-4 years, will be around 2,000 megawatts that we require, especially to into account all these projects. But some of these projects, they also have an element or a structure in it that will come up with power generation. The monies you're talking about, I think they'll also be generating in excess of 300 megawatts from their coordinated projects. So if all the independent power producers that were given licenses, if all the solar projects that we are talking about, if all the projects that is ESA, the Wange, the expansion, the Kariba, among others, are coming into fruition. We have also other related
Batoka,
etc. We have more than 5,000 megawatts, but the challenge really remains the same: harnessing sufficient capital and making those power projects a reality. These are the issues.
So what as the mining sector, do you have a view on regulation and deregulation? Because from where I sit as an ardent, free market capitalist, I think the solution is just to liberalize the mining sector. Let anybody who wants to produce power and sell it to whoever they want at whatever price they want. And then, the capital will flow to where the returns are. And
so should electricity.
Exactly. Yes, initiatives are there, and one may say, in a pseudo manner, to say it may have been liberalized, but the real issue is still controlling the distribution and transmission. Makes it difficult, even when one secure power. Offshore, you want to bring it to Zimbabwe.
Should the state own the distribution infrastructure? Is there a good reason for this?
Yes, as long as it's cost effective, as long as it's make it cheaper, we don't mind. But the wheeling charges, when they are now more than double the cost of the power itself, then
you have a problem. It doesn't make sense.
And to a large extent, if you blend, the power tariff, you can see. We are way above the average, the regional average. If you talk about the business tariff, in Zambia 6 cents, in South Africa,
but it's subsidized also.
We are more than 15 cents.
But I don't think we should compare with the rest of Africa, because it's also subsidized, and that is also a problem. But do you have a problem if ZESA comes on board and says, if the miners are willing to pay 25 cents, then they will have 100% electricity. Do you have a problem with that? Because from where you're coming
it must
from,
be cost effective and it must be affordable. The tariff must cost effective. The real issue is not just have a bit of power, but you must afford it. If you can't afford it, you must allow to import it, and the winning charges must be aligned to the region, so that the power gets to your mind as cheap as it could have been secured outside the country.
maybe that's the liberalization we need.
Maybe I'll let it others comment on it. But the real issue is the production of power. When you look at hydro, maybe 3 cents per kilowatt hour. When you take maybe
Coal.
maybe 5 to 6 cents. Okay, the small thermals maybe they be around 9-10 cents. But when you add the total cost, okay, administration among other fixed
And
costs,
distribution, yeah.
that's
Well,
where
the
all this
infrastructure
power
hasn't
is,
hasn't been
it
maintained.
is capital cost. That's what the argument. That's why the Lord has said that it goes above 15 cents. But the real issue, when you want to compete competitively globally, your power charges, your infrastructure charges must be competitive.
Oh, okay. Let's go back to mining again, especially gold. And here we want to talk about the environment because, your sector has been accused of, degradation of the environment and the attacks have been very specific, which is the Chinese mining companies that, they have destroyed our flora and fauna and the environment, and the Chamber of Mines has done absolutely nothing. What are the regulations and what happens when people flout those particular environmental laws?
Yeah, I'm happy you've said laws. Chamber of Mines doesn't craft laws. We don't. We are a voluntary organization. We can only work with the standards, but the real issue in terms of compliance can be enforced through the laws. The laws are there, so they have to be enforced. Every mine, before you start a mine, you must have an approved environmental management plan. Okay. Before you embark any project, okay, there is an environmental impact assessment that must be done. So it's only preventing those that will do illegal things or having their projects not have been approved properly that may result in this environmental degradation. And by far and large, you'd find, I don't want to comment on the Chinese projects, but those that are formal, those that are big, who are our members, they comply. This issue is more prevalent outside other organizations' membership, not aligned to the Chamber.
Not your members.
Not our members. If you look at our members, most of them, they have not just a plan, but they have environmental mitigation action. That you can see that they always reclaim and bring back. The post-mining.
Okay.
Yeah.
All right. That's good to hear. But I think that the onus now is back with the ministry so that they adhere to the laws that they have crafted themselves and ensure that everybody in the sector is adhering to those particular laws. Then let's go to platinum. Again, we've seen not as much in terms of production. If you look at platinum and lithium in Australia over the last 2-3 years, they've more or less, troubled their production. And when prices were high, they just, got as much out of the ground and just exported ore down to China, and then from China they do whatever. But it resulted in the Australian government actually having a surplus, a budgetary surplus, because they were just taking the ore and shipping it to China. But we had a very different view where we were talking of refineries and beneficiation and all that. And while we were talking, the prices came down. What's the Chamber of Mines perspective as far as beneficiation is concerned, or just exporting the ore? Because when you look at Canada and you look at Australia, they're just exporting the ore.
Yeah. we subscribe as an industry to beneficiation value addition notion. We are aligned with the government, but we're supported by the economics. As long as the cost benefit analysis are there, we support these beneficiation prescriptions. But as you have alluded, sometimes opportunities are short term, and you maximize as much as you can within short term. Notwithstanding, Zimbabwe allow minimum beneficiation concentrates from ore.
Okay.
And it could not have undermined both this first entry processing, which you expect any miner to do. And I can't think to a large extent it could have significantly affected the potential revenue that would have generated from exports in lithium. It's only that our vast resource would not have sufficient capital to exploit it as fast as it can. Also, notwithstanding, manufactured lithium products in terms of price have not come down in the same way the primary lithium have come down. Yes, the price of lithium come down significantly, but look at lithium sulfate, lithium carbonate, and the battery manufacturing. They were not all that sensitive to global dynamics. They're still in demand. So my take is government having agreed with lithium producers that they can benefit up to lithium sulfate, and producers have already committed. I think by next year to 2027, we may have some commissioning of these facilities that will see Zimbabwe exporting, and by exporting sulfate, I think we could have handled or manage the issues of low lithium prices.
Okay. All right. And then let's talk about rare earth minerals. Does Zimbabwe have these rare earth minerals? And is there any production that's actually happening if we have them, or any exploration that has actually happened?
Yeah, they're there. But as I've said, yes, we need more exploration to tap into this rare mineral resource. So not much have happened, but it's well known that we are one of the few countries in the world with those specific rare minerals. Yeah.
Okay, all right. And then let's talk about investors that actually come in from abroad. I would say that in the mining sector, South Africa will be the largest investor in our mining sector. Would I be correct if I say that?
Not really. Okay, when one look at Anglo having exposure to Ungi, yes, in as much you say it's
and implants,
but when also
But the primary listings of those businesses, okay, implants is Joburg, but
Yes.
Anglo is moved to
Exactly.
to London, the UK. So
but the money was coming primarily from South Africa.
yeah,
I would say that South Africans
before at some stage, yes, we could have said it
Okay.
that way, especially in the PGM sector, were dominant. But I think with the advent of the Chinese,
China
and
as well.
yes, the East Asia impact, I think we are seeing not just in Africa but globally.
All right. Okay. So let's
Yeah.
zero into China and South Africa as the largest investors in our mining sector. Would I be correct with that
Yes.
assertion? Okay. And then what I'm trying to get to is, what are their concerns? What is South Africa's concerns as far as Zimbabwean mining is concerned, and what is the Chinese concern as far as the industry is concerned?
I guess I have to say all investors, no matter the source of capital, they look on one main issue, profitability. Okay, and the profitability conditions are similar, by and large. It's cost and price issues. So the factors or issues that South African investors or Chinese investors are facing are pretty much the same.
Okay.
Yes,
So when we look
as
at
a chamber,
so
we
when
don't
you look
on
at-
a car of the investor.
So when you look at where that capital is going, the Chinese and the South Africans in mining, it's going to the DRC. does it mean that the profitability of the mines in the DRC is better than in?
Yeah,
Yeah, please. Yeah.
Yeah.
well, the prospects and profitability issues, yes, may be brighter, but I'm not sure whether it's short term, medium term, long term. But at the end of the day, what all investors look about is issues of maximizing profitability and addressing specific issues and conditions of doing business are really paramount. So without really blaming anyone, I think the real issue is to position our country to make it competitive so that you're able to attract that mobile capital, international capital is very mobile.
Talking about capital, we're in Victoria Falls, and one of our stock exchanges is actually based here, the Victoria Falls Stock Exchange. It's the US dollar denominated exchange, and the idea behind it was to attract foreign capital. And we did see some momentum in terms of mining houses taking advantage of the Victoria Falls Stock Exchange. We saw Caro list a debt instrument. We've got Padenga. We've got Caledonia, which is a recent listing. But over the last 18 months, I think it's fair to say that that momentum has slowed. Why don't we see the mining houses take advantage of the Victoria Falls Stock Exchange? You know, why is it that some of the big mining houses that are listed elsewhere in the world, like Zimbabwe, which is listed in Australia, they're not listed locally? They're not taking advantage of the Victoria Falls Stock Exchange. What's holding them back?
I'm not sure if this is understood properly. My take from understanding investments and capital issues, no operator, no business entity will not take advantage of available cheap capital. Okay, it's an issue of volumes. At the end of the day, whether the market is thick enough to support those huge billions of dollars. Once Vic falls, we're looking forward that it's a matter of time. If there is attraction, active participation from international, capital pandas, surely it's natural. You can't even force people and even query to say why they're not coming. As long as capital is available, as long as the market is thick enough, I'm not sure about any other supervening conditions that may not have had our sector taking advantage of the Vic Falls stock exchange, but we need it just like any other sector. So we look forward that it's a matter of time. Whatever glitches or any issues that are undermining activity of Vic Falls is short term. As it gains its momentum, you'll find us will be joining.
Then some of our viewers are actually business people in the diaspora who are looking at the mining sector. So could you give us a 101? Somebody is in the diaspora and is thinking, you know what, I think I want to invest in a mine, in a small gold mine or lithium or whatever it is in the sector. Guide them through the process. What do they need to do? What should they be aware of? And do you actually think it's a good idea for them to invest in the sector?
Yes, anyone, any Zimbabwean can apply for a mining license. Okay, it depends on your investment exposure you want to. If it's direct, whether you want to venture actually into mining or you want to go through an exploration. So if you want to explore and identify a greenfield, you apply an exploration license and we give it the first right once you identify the mineral, if it's available, to mine it. If you don't want, you can sell it. You can auction it. Okay, yeah, the laws are so permissible, but if you want exposure direct to existing entities, you can have direct acquisition on those that may have interest to partner, those that have capital shortfalls, or sometimes
where can they find this information?
It's available. They can get this information from ZIDA, Zimbabwe Investment Development Agents. They can get this investment from the Ministry of Mines. They can get this information from even Chamber of Mines, and this is public available information.
Okay.
Exactly.
All right. Okay. No. I think.
So talking about this year's conference, what is your theme? And for you to walk away from Vic Falls saying it's a success, do you have any particular
Yes.
key?
Yes, this conference was not really crafted or participated for its sake, but supposed to address pertinent issues that affect the industry. So every year, our theme is informed by matters that require address or to be attended to. So this year, our theme was unlock mining potential and maximize its contribution. The potential itself means we have to tap into opportunity that existing, but there are specific issues or matters that need to be addressed. And this is the issues that the Indaba have been debating. And we always come up with a resolution every time because we have in government, investors, and other key stakeholders seated on the same table, okay, until they come up with a solution. And we've seen over the past years all issues that could have been discussed, seeing some traction. So, yes, we have a number of issues that miners expected to be addressed. These include the issues surrounding power. Again, all those in the power sector, those in the other sectors that use power, the mining, the policymakers, they're all there debating until they agree on how they can do. Also, the regional international experience, they'll also be there, or showing how best Zimbabwe can also deal with these issues. To become progressive, the same way they may have done it, or the same way they may have avoided specific pitfalls. So, yes, we had power, issues surrounding tax. It's very important. 80% of issues that investors look forward to have tax implication or are related to tax.
Okay.
Whatever you think about. So investors, whenever they make a decision, they think about tax in mind. Tax is a cost. Tax affects your profitability to a large extent. So mining has to balance those issues. So tax issues are equally debated. The monetary foreign exchange framework equally is on the agenda. There's been undermining issues relating to growth of mining. Financing. We have a session on financing. Again, these are issues that we expect. Again, we have bankers, they're all here. Okay, your Vic Falls Stock Exchange, they're here. Okay, others international financial providers, they are here to discuss these issues. The issues around of other infrastructure, rail, water, etc., they're equally here. Not also forgetting issues around exploration. Tomorrow there's also a session on exploration, discussing issues around exploration. But from government side, they want mine to contribute to fiscus as well as the economic development agenda. So this issue will be there because it's an issue of balancing tax and profitability. So again, these issues will be debated on what we call an optimal tax framework and how best we can promote contribution without really undermining the goose that laid the golden egg.
Okay, fantastic. I think tomorrow we'll get into the weeds, and we're looking forward to that. But thank you very much for this, Isaac. I thoroughly enjoyed it, and you held your own.
Thank you.
Which is wonderful.
No, thank you so much for hosting us.
Great to see.
Thank you.
Yeah.
It's great to be in this wonderful
Without doubt,
resort.
interaction, we'll be able to get more than, if not better than what we've been discussing.
Absolutely. And thank you very much to Nedbank for sponsoring this show. And thank you very much to the Chamber of Miners, the Mining Chamber, the Chamber of Mines. The Chamber of Mines. Thank you very much for hosting us.
Thank you.
And thank you very much to everybody. And keep on watching the show. We've got lots in store this coming 2 days. Cheers.